Hello, hello, hello. We're going to go live a little bit, see what we can see today, see what we can share, see who we can include, see if there's any information we can pass on to some people, if we can help some folks. Gonna start doing these every week at like Market Mondays. Let me turn this music down a little bit. We're gonna do Market Mondays, where we will see what maybe there's some trades we can look at for the week. You know, I'm a sellers coach. I coach options, but I coach sellers. Everybody always hears about option buyers or option buying calls and buying puts. Now, you know, if you buy something there, somebody has to sell it, right? Somebody has to sell it. So I am a seller's coach. I coach sellers. Well, share this out with your friends and your family and your profiles and your timelines to let the people know that we are here. We're going to do a little bit of talking. A little bit. I am Arlissa Pinkleton, as you can see there. I'm Arlissa Pinkleton, and I am the Educator2Trader. Where did that name come from? It came from the fact that I am a math educator. I have been a math educator for the last, oh my goodness, long time. I was an engineer before that, though, so I've been in the math world for a while. And then I became a stock market trader. So I went from being an educator. I still am an educator. Actually, I still teach college algebra at University of North Florida. And I also help people to use the stock market to grow their resources. Talking about a side hustle, the stock market is a great side hustle. You don't have to sell to nobody. You can do it all by yourself. You can do it on a deserted island, or you can do it in a busy city street. You can sit in Starbucks and do it. You can be anywhere you want to be and be trading stocks. As long as the stock market is open, you know, you got to do it you have to trade during trading hours. You don't get to just trade when you feel like it. Unless you trade futures, which I don't trade futures, but people do. And futures is a little bit different. Is the music too loud? Somebody tell me in one of these posts, one of these places where you see me, tell me if the music is fine. I can't hear it from where I am, but I figured you can. Or is the microphone too loud? Y'all tell me something about what's going on. One place it says 5, one place it says 7. Whew. Well, I'm not going to waste a lot of time doing the live. I wanted to share with us some potential seller setups for this week. Now, as a seller of options, there are a few strategies that we use as sellers. We use covered calls, we use cash secure puts, we sell vertical spreads, put credit spreads, call credit spreads, other way around. We also short. That's really the 4 main strategies that sellers use, right? And I'm going to show you one of those types with a few examples today. See if I can get us a share screen going. Okay, I picked it. Oh, present. There we go. Me and StreamYard, we're gonna figure each other out here as we go. We're gonna figure each other out. Oh, yeah, that'll be good. That'll be good. Da, 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 da. There we go. This is a chart. Those who trade stocks and options, this is a chart. All right, it's a stock market chart. This is a daily chart. If you look up here in the top right corner here, this is a D, which means it's a daily chart, which means every one of these candles represents a day worth of data, a day's worth of data. You got the open, close, the high and the low each day, and it goes back, and you got the dates at the bottom and the prices on the right. Well, when you're selling covered calls, well, with covered calls, you need to either have 100 shares of the stock, or at least 100 shares of the stock, and you need to have, or you need to have a long call contract. I like to do selling covered calls with the shares, but I've done it with leaps or long calls. I've done it with those as well, but I like it better with 100 shares. So if we're looking at something like EOSE, this is EOS Energy Enterprises, you see here, up here at the top left. The cost of this stock is $2.25 right now. That's how much that each share costs, $2.25. If you already have 100 shares, then you're in good shape. Otherwise, you'll need to buy 100 shares. If you were buying 100 shares, if you were going to do a covered call situation, you would pick up here where it says BA. This stands for bid and ask. You're going to buy 100 shares. And I won't go through all these details for the other ones. I just want to walk you through what you would do. It says here you're going to be buying 100 shares, right? And it gives you the price, tells you how much it's going to be. And when you're ready, you can push confirm and send. Basically says, I'm confirming and sending. I'm buying these stocks for myself. After you own your 100 shares, then you want to sell the call. You cannot sell a covered call without having 100 shares or a long call option. You need to have the 100 shares in order to sell those. So if we decide we're going to do a covered call, right, we can pick a 2.5 strike. We need to be on the calls side. We're selling a call. Anytime you're selling a call, you need to be on the call side. The ask is for buyers when you're buying up here, and the bid is for selling if you're selling a covered call. So you sell a covered call at the 2.5 strike price, and collect. When you're a seller, you take in money. That's one of the reasons why we like being sellers. When you're a seller, you take in money. They give you money to quote unquote borrow your stocks. You can pick for April. You can pick for May if you want. If you do 2.5 strike for the May expiration, you would then, collect $50 in premiums. You collect that $50 right away. The broker gives you the $50 right then. As soon as you enter the trade, they give you the money. You can do whatever else you want to do with it. Whatsoever. This is my thought though. If you paid $225 because you bought 100 shares, $225, you paid $225 for those, right? And you collected $30 immediately in premiums, then you really only paid $195 for the shares because you got money right away. You paid $225. Remember, 2.25 times 100, $225. And then you collected $30 in premiums when you sold this covered call for the nearest expiration date, which in this case is April the 21st. Okay, that would be a covered call. Very inexpensive. What you've paid so far is you paid $225 up front. You got money back. You really only paid $195. So less than $200, and you're in a trade, and you can use these shares. You own these 100 shares. You can use these shares over and over, week after week, to continue to sell cover calls. Maybe not week after week, every month after month on EOSE, because they only have monthly expirations. So you can use it month after month. If the price goes up past 2.5, your shares go away to whoever gets them, and you collect the difference in price for those. Because if you paid $225 and you collect $250, then you've made money on your shares. It's like buying at one price, selling at another price, right? So that's EOSE, kind of an inexpensive one we can look at. How about we look at AMC? How about we look at AMC, right? AMC, the movie theater people. Look at AMC. Oh, I want to close this up too. Okay, so AMC price here is $4.27 for AMC. A little bit more expensive than the EOSE, but not too much. Where'd my shares go? Where'd my chart go? There we are. This is AMC. Cost of the shares right now, $4.27. If you already own 100 shares, you can sell a covered call right away. But now, I want to make this clear. When you're selling covered calls, you need increments of 100 shares. So if you own 100 shares, you can sell one covered call. You own 200 shares, you can sell two covered calls. So on and so forth. So you can do it in increments of 100 shares. $4.27. If you don't own them, you buy them right away. You have $427 you spend. You can go right from here. AMC is a weekly stock. So you can go right from your purchase of $427. If you want to do it for this week, a covered call for this week, you can use the 4.5 strike. Remember, we're on the calls side. Stay with the calls side, right? And you can collect $14 in premiums right away. If you decide, I really want to collect more than that for my $427, you can go out another week. Again, pick the 4.5 strike and collect $24. Notice I'm picking a strike that is higher than what you paid. You want to pick a covered call strike that is higher than what you paid for the stock. If you bought the stock some other time ago, maybe you bought the stock and you paid $5 for it, then you need to pick a strike that's $5 or higher. You don't want to pick a strike lower than what you paid for, because if it sells or gets called away, then you're going to lose money on your 100 shares. That's not what you want. The cost basis is how much you paid for it. Your covered call strike should be equal to or higher than that. All right. With AMC, you can do this each week. You got the 24th, the 31st. You can continue to go out, or you can just run it week after week. This is one of those plays you can run week after week, right? As you paid $427 for it. As time goes on, if it goes higher, you can continue to sell your strikes higher, or you can decide you're gonna let it go. As long as you let it go at some price that's higher than what you paid for it, you want to do that. Okay, let's look at another one. ETNB. ETNB is a bio. It's 89 Bio is the name of this company. It's another monthly one. $11.76 are these shares. $11.76 shares. So if you're going to buy 100 shares, you're going to have to spend $1,176 buying shares. Yeah. And then you want to pick a strike higher than that in order for you. But looky here. Shoot. April 21st, $11.76 you paid for these shares. And your bid price, or what you're going to take in premiums, is $350 right off rip. That 12.5, yes, you picked the 12.5 strike. And for April 21st, which is, about a month away, you're going to collect $350 immediately when you enter that trade. You paid $1,176, you take in $350, which means you've really only paid $800 for, you paid $800 for 100 of $11 stock. You paid $800 for an $1,100 stock. $1,100 worth of stock. Doesn't sound bad, huh? Last one. I think you all might like this one. GameStop. GameStop has earnings this week. So they, you never know with earnings whether something's going to go up or down. But, doesn't necessarily hurt to jump in and see what the end going to be. The price of GameStop is currently $16.87. So if you bought shares, you would spend $1,687 on shares. And if you did a weekly covered call, you want to pick higher than the current price. You could pick 17 and collect $120, or you can select 17.5 and collect $100. That's each week. You paid for this one time, collect $100 each week. In 16 weeks, your stocks are basically free. You've collected enough money over that period of time to make the stock be free, and you continue to make money on your asset. Your 100 shares of stock is the asset, and then you sell against that asset in order to take in premiums. You use your asset as your collateral, right? All righty. Well, I wanted to share 3 or 4 potentials for this week. We did EOSE, AMC, ETNB, and GME. EOSE, AMC, ENTB, ETNB, sorry, and GME, GameStop. Alrighty, y'all be sure to like and subscribe to the channel. I'm Arlissa. I'm an option seller coach, helping people to use the stock market to generate weekly, consistent income. Like the channel, y'all can find me in all the places. Educator to Trader. I'm on Facebook. I'm on Instagram. I'm on TikTok. I'm on LinkedIn. We're all the places, everywhere. If anybody put, oh, I see some comments up here. Wait. Let me see, because I was gonna say, if anybody put comments, I cannot see them. Oh yes, I just said my mic was fine. Hi, hey Doug. This was great. I hope you go live again soon. Yeah, I'm gonna try to do this more often, Saida. Alrighty. Well, I will see you all again. Find me in all the places. Like and subscribe and follow me. And we'll talk again soon. Alrighty. Bye. Bye.